Okay. Good morning, you beautiful human beings. Guys, it is Monday. It is officially the start of a brand new month. It is February. What a time to be alive. If you're part of DVDM markets, whether you're free or premium plus, it does not matter. Massive good morning to you. You are home. You are in the exact place you need to be. Quick shout out from everybody in the house. I can see Quinton's in the house, Garwin, Felicity's where I can see Nashil, Vaynant, and Jard. Is a Claude Jonas. Yes. Beautiful. Good morning, amazing human beings. Now, guys, if you're part of Premium Plus, massive week ahead, right? Copy trade starts today, right? We also have the Telegram channel for the signal, so you never miss any trades whatsoever. Now, if you're part of Premium Plus and you're hearing about copy trades for the first time, where have you been? We have had a few people that have obviously joined us quite recently, so you can just go ahead there in Premium Plus. Registration for copy trades now open. You can follow the video. Super easy to do. If you struggle this morning with your password or your account or anything like that, please do reach out, let us know. We'll put you in contact with TDM and they'll give you a how-to on how to reset that password. But it should be pretty easy, but just let us know if you struggle at all, right? We have a massive week planned ahead. There's a lot happening in the world, a lot happening in the markets. Now, we had NFP on Friday. NFP on the dollar side had a blowout result, right? Hundreds of thousands of more jobs created than economists expected. And that is going to cause a little bit of a ripple in the market. Now, what we've generally seen from the data, and that's the beautiful thing about what we do at DVDM markets, is the transparency to be able to go back, look at the data, and have a look at where we've had great weeks, where we've had not so great weeks, and have a little bit of that comparison. So we published last week our monthly results for January, and this is where we get a lot of the data, right? So we keep track of every single trade we've issued as a single, right? And we go back and we look at every single point, every single one of those trades, and we look at, all right, where did we do well? Which days did we not do so well? And where did we have, great weeks, great months? Now, week 2 was obviously quite difficult. We had an absolute blowout for week 3, massive week. We actually had running positions, not necessarily any stop losses at NZD, USD. We took as a stop because it sort of continued into a negative into the next week. Week 4, great. And then week 5, we obviously ended off already a little bit early last week, I think around about Wednesday. So we obviously go through the data, we make sure and we check. Now, this is why some of the days we do say that we're going to take it a little bit easier. And the reason why we take it a little bit easier after something like NFP just purely comes down to the fact that the market needs to fully absorb that data. Markets need to decide what that data means. And as I'm going to show you in this morning's articles, there's quite a lot of interpretation the market needs to do, and I want to help you guys wrap your heads around it. So again, if you guys in the comments, I can see Petunia's in the house, I can see Tawako's in the house. Welcome to every single one of you. Now, let's jump into some of the data. Let's jump into the news. Let's jump into what the world's busy speaking about, and then we'll dive a little bit deeper, and I'll show you guys some charts and what we're busy thinking from a trade perspective this week. Again, and also, first of all, if you're brand new to DVDM markets as a whole, we obviously had a bunch of new clients come into the free area. If you're brand new to DVDM markets, just have a look at the inbox message you get on school. That inbox message is just a navigational, how things work, how to find different things, how to find the signals, how to navigate, how to introduce yourself. That will really help you just to feel a little bit more at home, so that you can kind of settle in and be a little bit more assured. But just a massive welcome to you. Now, in terms of what's happening in the markets this week, I've also posted into school, whether you're in Premium Plus or you are in free. I've obviously posted, what you need to know this week. And you guys can obviously go through that. So this right here gives you the link to the articles that I'm about to discuss this morning. You can go through that in your own time in a bit of detail. The important thing to understand is that we've got a few big companies that still need to declare their earnings, right? Nothing massive and noteworthy. I think we have the likes of Disney and these types of names. And this really kind of just cements this general trajectory of how we are moving from an earnings and income perspective. However, we are in a little bit of a strange climate, right? If we have a look at some of the earnings that we got last week, right? Microsoft and Google didn't really necessarily surprise the markets all too well, but Meta and Amazon had a massive earnings report or earnings season for Q4 in terms of their reportings at the end of Q1. But that still being said, markets are really not taking the earnings at face value anymore. They're really looking at the overall sentiment. So what is the overall sentiment, right? You guys were previously with us when we obviously sat down, we looked at the Fed Reserve. We actually had a live session for that particular interest rate announcement with Powell, and it was fairly nonchalant, right? Powell wasn't giving away any leads. He wasn't, giving away any sort of suggestions of what the Fed will do. However, the one thing he did do is there was previously an expectation at the next Fed interest rate meeting, which is in March, right? There was a previous expectation amongst economists. As much as 80% of economists believed that the Fed would start doing rate cuts from March, right? Now, in the meeting that we obviously had with Powell on Wednesday last week, the one critical thing he did was dismiss, not in totality, not in 1000% certainty, but basically dismiss the likelihood of a rate cut in March. Now, the one good piece of data we're able to pull from that is we've got this little chart behind us. Now, on face value, it looks insignificant, right? But what I want to show you guys, and where it's quite important to pay attention here is, right, if we go back as far as October, right, this is what the Fed determined as, you know, the potential rate cycle at the end of 2025. Now, bear in mind, this is a straight line. It doesn't represent, you know, rate cuts month after month. But what it basically says is that at the end of 2024, start of 2025, the FOMC leaders believed that the Fed, or the interest rate, the government-based interest rate, would be at 4.6%, right? The December meeting, which was highly optimistic, right, said that the 1 year movement, or the start of 2025 at the end of 2024, that would be 3.7, and that is just lifted slightly in this most recent Fed meeting last week, down to 3.9%, right? And the one big piece of data that the Fed obviously gave away is that the March number, they do not see March yielding a rate cut. Now, there's obviously a few things that can happen between today and March that could make that a reality. They'll need to see inflation cooling down quite significantly, and that's in terms of the CPI. We do get the CPI next week, Tuesday, right? So the date for that would be next week, Tuesday would be the 13th of February. We get that first reading. So between now and then, markets are really proceeding with caution. There's a lot of discussion around rate cuts. That's what's really driving the markets right now. Not so much earnings reports, not so much the dollar's value, not so much external geopolitical issues around the, you know, different issues around the world, but really the sentiment of at what point will the Fed start cutting rates. Now, the one thing that is sure, or I think is pretty much written in stone, is that the Fed will cut rates. It's inevitable that over the course of this year, rate cuts will happen. The big thing the market's trying to work out is timing over when that is going to happen. Now, can the dollar significantly get stronger between now and then? I don't believe so. I think that future's already written, right? The big thing is that trigger for investors to make that switch. They're trying to get the most out of their money from government-backed securities that currently have high interest rates. They're getting really good yields, getting really good dividends on those government-backed securities. They're trying to time that switch of when to take that money out and move it into other areas as the rates start to come down. So that is the big discussion for this week. You're welcome to read through the article, and there's a ton of insight there for you that you can obviously go through. In addition to that, I just also forwarded you guys the link inside the note for this morning. Also giving you a link to a really cool tool, which is the CME group, right? And they've got what's called a Fed Watch tool. And what this does is, and I've given you a link to this, and you can go click on it, and it'll always represent the next Fed interest rate or the next meeting, interest rate announcement, and what the sentiment is of the markets at where that will be. Now, as I mentioned to you, as much as 80% of the markets believed, you know, even last month, that we would start to receive, specifically after that December meeting, that we would receive a rate cut as early as March. That has shifted quite substantially to the point where only 15% of the markets believed there would be a rate cut in March, right? So that's what's currently driving the markets quite substantially this week. It's going to be a big talking point across the board. We obviously have some of those earnings that still need to be declared, right? We've got a few companies that still need to post their earnings. We've got Lily's, we've got Disney, Spotify, McDonald's, Chipotle, and Pepsi still declaring some of their earnings this week. We might take one of these and follow along on the earnings reports. Potentially a company like Disney obviously is going through a massive transformation, trying to get into the streaming side with lackluster numbers, trying to compete with Netflix and the likes. It'll be very, very interesting to see their Q4 data as well as their forward guidance. That really might help us to get a better insight on the digital streaming side of things. But we might pick one of these and we might do that as a live trade-a-thon sometime in the course of this week. Now, looking at the economic data front, I've basically isolated this report only to high impact news. And as you can see, from pretty much later this week, from this week as we currently sit, from the 7th is the first sort of high impact news, and that's a Canadian data point, right through till Friday. We don't have anything of substance currently sitting on the dollar, the euro, or the pound, right, scheduled for this week. So from a fundamental data point, we pretty much have a clean slate this week. We have no external factors, scheduled external factors that should come in. Again, as you guys know, as you guys have seen with markets, anything can happen, right? We can obviously get Biden be an absolute doorknob and say something stupid. We could get Trump coming back, who definitely will say something stupid. We obviously have all the external stuff geopolitically. So there still can be external factors that come in here. But from a planned fundamental data point, we pretty much have a clean slate for this week. Now, moving on into some of the trades, we have a ton of things we've been looking at over the weekend. I've spent some time over Sunday specifically, really looking at the week and how the week is formed, how the week is set up. So there's quite a bit that is happening. But just to focus on some big points that are currently happening that I think are worthwhile for you to know about. We're currently going to speak about gold, right? Gold currently sitting on a 1 hour time frame that I'm looking at here behind me. And we were speaking about this bull run that gold was currently under last week. Obviously, this right there is that NFP data from Friday, right? NFP data, extremely positive for the dollar. As I mentioned earlier, the dollar reported that unemployment rates basically remained flat. There was no tick up as economists expected. There was, well over 100,000 new jobs created that was not expected. So the NFP, the employment data for the US, came out red hot. Now, that adds to the talking point of what we're speaking about with regards to the Fed, because again, with the US economy running so well, right, running as red hot as it is, the Fed is under no obligation, or at least reduces the amount of stress on their shoulders to decrease rates, right? So think about it like this, right? The economy is run away, right? The current economy is pushing forward, posting very high numbers. The purpose of the Fed to keep rates higher for longer is to slow down the economy, right? So if the economy is showing that more and more people are becoming employed, these things are all pushing in the right trajectory, there's no immediate obligation for them to reduce rates. The reason the Fed will reduce rates is to avoid almost starving the economy for too long and causing a recession or forcing the US economy into the ground. So NFP data for Friday certainly allows the Fed a little bit more breathing space to hold rates at where they are for longer. That obviously fueled a positive dollar against the gold, inversely correlated. So we've seen that push down. We saw a reversal over that Friday afternoon or that Friday evening. We saw markets sort of pull back. There was a substantial drop, a drop in a bit of phases there, but obviously the immediate drop happened, pushed a little bit lower, started the pullback process, gapped a little bit higher at market open this morning, has pushed back down to that market bottom. So that market bottom that we're clearly monitoring is at 2030, right? With, projections into that 2028 level, so $2,028 to an ounce of gold. That is going to be our lowest levels of support there, but we're really monitoring that market formation there for two reasons, right? If we start to see some dollar weakness, some cooling off the dollar after a red hot Friday, that will present some buying opportunities for us. And it's going to be a very clear sort of market structure we're looking for clear breakouts on, right? We might observe something of that nature. That's something that needs to happen there. We might also, so same market structure there. So we would be looking at a clear break there to take advantage of that structure. So should we see, some pushes past the 2034, 2036 level, we might start to look for some buy opportunities. But again, we're mostly focused in some selling activity here. Again, because most of the market is going to be tossing around this whole Fed discussion, probably increase the strength of the dollar. And that's kind of where gold is sitting right now. With regards to the US 30 and US 100, right, they're in a little bit of a different league in the sense that, there's a few other things contributing to their prices. Obviously, as I mentioned, the earnings reports, we've got those companies that are going to be pricing and releasing some of their data. This is going to be very interesting to watch, right? So obviously, I've been looking at some price action, some market formations. You're welcome to draw this one out too if you have it on your side. This is a 1 hour time frame. I'm just looking at this rising market structure here. Again, obviously, we would want to, in this particular structure, our best possible trades are sitting in buy locations. As soon as we get to, that sort of level, depending how markets react there, based on some sort of fib retracement. But obviously we're looking at how do we sell off of this rising structure, right? So inverse trading against the trend, right? So that's what we're looking for. We're going to be looking for locations to potentially start selling as soon as we hit some of those next highs, to kind of retrace a little bit further down and take advantage of that strong red hot dollar this week. So the team is obviously monitoring quite intensely. The one thing I do want to point out that's currently happening as we speak is US 100, right? So US 100 started with a little bit of like a triangle formation. Earlier on this morning, I was having a look at the possibility of what the US 100 was currently doing and whether we would, kind of make a new low. This is a 5-minute time frame. I'll do a bit of a zoom in for you guys. And that's kind of where we were at the points of analysis this morning. I started to see a little bit of breakouts, a little bit of hold on support here. And at the moment, it definitely seems like, there is a tiny band of resistance there that the US 100 has gone through. I would like to see the US 100 go through that level. And I'd like to see the US 100 come and settle above that before determining that this would be a surefire long position here, right? We've got a few levels between where we are and where we need to be, acting as support / resistance, but that's going to be my main focus for today, is just focusing on, again, what does that push look like? Are we going to get some of that temporary, rebound off that very serious dollar strength we saw on Friday? And, what can we play off that long term? US 30 has some good price action. German 30 has got some good price action. Some immediate price action on the 1 hour is definitely looking like a little bit of a sell-off there. Getting down into it on a 30-minute time frame, starting to reveal some uncertainty on the top side, uncertainty on the downside, but certainly just maintaining this immediate trend towards the downside. So we are very keenly looking for any sort of breakouts below some of that liquidity there, and that's what we're going to be monitoring out for as well this week. So again, being Monday, it may be a little bit slow. We are going to be looking at taking things a little bit carefully. Most importantly, right, if you guys do have your copy trades set up, you've gone through the tutorial of how to go and set that up. I just want to make sure that everybody has their copy trades active, right? So linking your account is one thing, but then selecting that it is active is obviously the most important thing, right? So if you guys go in and you watch the tutorial and you set that up, right, just go through that one more time and make sure that it is active, that all new trades will copy over. And I'm hoping to have a massive celebration with you guys towards the end of this week. That's what it's all about. You've been asking for a ton of time. The time is here. The time is now. We're about to take over. So you're part of Premium Plus, part of Free, doesn't matter. Massive welcome from wherever in the world you are joining us. I can see Rian's in the house, Jeffrey's in the house. Welcome and good morning. Outside of that, guys, the team is very hard at work. It is a new week with a lot of challenges for us. However, we're going to make sure we continue to deliver as always. Appreciate your support, appreciate your love. Go ahead and like this video and share this with somebody that may need it. It does a ton for the YouTube algorithm, does a ton for our vision and what we have planned for the markets. Outside of that, you know the drill. Until I see you a little bit later, as always, much love and goodbye.